Hi there, I hope you've had a great week. And first market we're looking at here is the Forex with the Euro US dollar. I'll try and keep the analysis quite quick. I have to make sure it stays within 10-minute time frame just for the upload to YouTube. So what we're looking at here is we've seen the Euro dollar fall quite strongly, and it's also fallen down toward the 38.2 Fibonacci retracement level, so we may see this market find some support here and move upward. And that is also in time with the next time phase for this market. What I mean by time phase, it'll probably head sideways for a bit, it'll be a bit choppy. Very similar to this previous period here where the market went sideways for a bit, and that is what's called a time phase, where it's moving sideways through time mostly. And when it falls strongly like this, or it's a rapid decline or a rapid rise like over here, these are price phases, and so the markets are generally moving in one or the other. And the interesting thing is if we just look at the distance of that fall from that high to that low, we can actually move that line from the next high. It's actually a little bit further where it's for distance, but you can generally find that these price phases are very similar. If we look at some of these smaller price phases moving up here where there was a burst of movement, you can generally move that same line and from the low to the next high, again from the low to the next high, and it's generally very similar sort of moves. It's not always exact, but it's very interesting to see markets do that. So pretty much what we were looking at for here with the euro is just a new entry for this market. We've had a really significant rise up and then a very rapid decline in a short amount of time. Looking at the British pound as a bit more of a longer term view, it has been really travelling sideways for quite some time, and only actually it looked like it was going to be finding some support around this red line here, as back in time there's been quite a bit of support and resistance around that line, as you can see, and that's why I was looking during the week to take a long position on that. But the market has fallen and broken down through that support quite strongly. So this market looks like over the medium term it's heading further south. Very similar with the Canadian dollar. Look, we've had quite a long time of this market going sideways. It's really been finding a lot of activity through this price band here. It did that same sort of thing back a number of years ago, back in 2008, and it's just really ranging through this price range here. We had a short trade on that market which only was just filled and then turned around and got stopped out. So what I like to do is enter the markets sort of just beyond support and resistance levels, which means if that is broken, it has a higher probability of continuing into that direction. That's not always the case, of course, but it's only a highest probability event, which means around about 80 to 90% of the time. So there is, of course, that 20 to 30% of the time, sorry, 10 to 20% of that time where the market doesn't do that. The Aussie dollar, this is one of my favourite actually. It's been quite interesting with the head and shoulders patterns which I've mentioned previously. This is a shoulder here with a head in between, another shoulder. What you find is when markets break down below these types of patterns, it's very bearish and we have a lot further to fall. With it breaking above this short-term downtrend line here, we got in the market long and it hit our profit target nice and quickly, putting it in a break-even position, but then turned around and stopped that trade out. So that was a no win, no loss trade. And now we are actually in a short trade in this market because it's been that blue bar there is an outside bar, which is a very strong reversal bar. It looks like this market will be heading further south. The US not really been giving us any good solid entry signals as of late, so that's just a matter of waiting with that market. Now the Swissy, the USD CHF, has actually was really nicely rising up above a nice long-term or medium-term, trend line there. It did fall down a few times or just here, but the market closed up again strongly. We did get in long on this bar here. Unfortunately, the market then has turned around and gone against us and stopped us out. So this is the outside bar, which is classified as a support, one of the support lines going through here where we had our entry just above it. We got in, that trade was extended that a day extra, and the market actually entered and we have been stopped out, so it has actually gotten has weakened below that uptrend line. Now we may see this market go through a price phase which a time phase which is actually heading sideways for a bit, or downwards and sideways, before another price phase. This long move up is a price phase. Looking at the indices, this is the Australian Top 200 Index, and this is the weekly chart, and these bars are really, for the start of a new trading cycle, are very weak. They are not like these typical nice strong bars that you can see. Another strong bar here which we can't see really behind this, I can delete that off there, but this nice strong bar here upward, this one here with the market, so that on the daily is a very strong rise up. This is not strong at all. I really believe to see a lot more downward movement. Here's a weekly chart of the FTSE, same sort of thing. That there is looking like a doji, which means we could reverse off here next week. Again with the Nikkei. And the S&P 500, all looking extremely weak. I believe next week we'll definitely see a lot of selling off. So we actually had, looking at the daily chart for the ASX 200, we had a nice long trade which we obviously got out of, capturing a little bit of profit here. We got into another long trade, hit our profit target nice and early. The market reversed, closing us out even position, which is a shame, but anyway, it's better than that than having a loss. I do believe though that we will soon probably get a rally up, possibly on Monday, enough for us to gain a short entry. So once we have a green bar, I'll be looking at getting in short. Should this market dump, we want to get into it. Similar with the Nikkei, we actually had a long entry here. We were only a few points off our profit target before the market reversed, stopping this out at as a losing trade. We are looking to enter this market short here, just underneath this, outside the blue bar here. We will look to enter this market short. Should the market dump, we'll get in on that trade there. The FTSE is the same as well. We have a nice big weak outside bar here. The market has rallied up, but it's only a bar. So we will place a short trade just underneath this first blue bar here, a sell stop order that will get us in should the market considerably weaken. Looking at the commodities now, oil is looking very choppy. Our order didn't execute last week, which is okay. The market has weakened, then it's up, rallying up again slightly here. So it's looking at quite choppy, still going over this sort of medium to longer term sideways move. It really doesn't seem to want to break out of that. A lot of indecision in that market. Then we have gold. We actually only got stopped out of this trade by 7 points, which was a little bit of a shame because it has come back into our favour and does look like it will continue in that way, but hasn't given us a new entry as yet. So unfortunately this last week there was a little bit of a disappointing results on the board, which is a shame, especially it's taken our February tally down a bit of the overall picture for February. But again, it's a matter of just sticking within your money management, keeping that nice and strong, and just questions, please email them in. Thank you.